Sorry, it's the credit score. We need at least a 650 to approve your application. The leasing agent smiled awkwardly. Samantha stood frozen, keys still in her hand, heart sinking. She had a steady job, paid her bills, never missed rent. But none of that mattered. Her credit score was 602. And this wasn't the first time. The car she wanted? Rejected. A better interest rate? Denied. It felt like she was running in circles, trapped by a number she didn't fully understand. Sound familiar? Here's the truth. Most people stuck at 600 don't even realize the silent mistakes they're making. These aren't huge blunders or obvious red flags. They're subtle habits that chip away at your credit month after month. But today, we're changing that. In this video, we'll break down 5 sneaky credit mistakes that are holding you back and how to fix each one with simple, actionable steps. So if you're ready to level up your financial game and stop letting your credit score control your life, this video is for you. Hit like, subscribe, and turn on notifications, because by the end, you'll not only understand what's dragging your score down, you'll finally have a plan to rise above it. Let's dive in. Mistake number 1, paying bills late. Even once. For years, Marcus thought missing a bill by a few days wasn't a big deal. He was juggling rent, student loans, and credit cards. Sometimes a due date slipped through the cracks, but he always paid, eventually. But what he didn't know was this. Just one late payment can tank your credit score by up to 100 points, and it stays on your report for 7 years. When Marcus finally sat down with a credit advisor, he was shocked. Despite having a decent income, his score had flatlined at 610. Why? Because credit history isn't just about what you pay. It's about when you pay it. Lenders look for reliability. Even one 30-day late payment sends a red flag that you might be a risk. Quick fix. Set up auto-pay for minimums on all bills. Use calendar reminders or budgeting apps like Mint or Truebill. If you've already missed a payment, call the creditor. Many allow one-time removals if you have a good history. Remember, your credit score isn't about how much you owe, it's about how well you manage it. Mistake number 2, maxing out your credit cards. When Jasmine opened her first credit card, she felt empowered. $3,000 in available credit? It felt like free money. New clothes, dinners out, even concert tickets, she swiped without thinking twice. But soon, Jasmine hit 90% utilization on her card. And her credit score? It dropped like a rock, from 680 to 605 in just 2 months. Why? Because credit utilization, the percentage of your available credit you're using, makes up 30% of your score. Even if you pay on time, maxing out your cards makes lenders think you're in over your head. The magic number? Keep usage under 30%. For Jasmine's $3,000 limit, that meant staying below $900. Quick fix. Ask for a credit limit increase without a hard inquiry. Pay down balances before the statement date, not just the due date. Spread spending across multiple cards instead of maxing out one. Jasmine learned the hard way. You don't have to be in debt to hurt your credit, just close to it. Mistake number 3, closing old credit cards. When Marcus finally paid off his first credit card, he felt proud. No more interest, no more temptation. So he did what he thought was smart. He closed the account. 3 weeks later, his credit score dipped by 40 points. Why? Because Marcus had just cut off his oldest credit history and a big chunk of his available credit. 2 crucial factors in your credit score. Length of credit history counts for 15%. Credit utilization ratio got worse because he reduced his total available credit. Even though Marcus was debt-free, his credit report said otherwise. It's like burning your high school diploma after getting into college. Short-sighted and unnecessary. The smart move? Keep old cards open. Use them occasionally for small purchases and pay in full. This keeps the account active, protects your score, and shows long-term credit trustworthiness. For Marcus, that 40-point drop meant higher interest on a car loan he applied for 6 months later. A small decision that cost him thousands. Mistake number 4, co-signing loans without a backup plan. When Marcus's younger cousin asked him to co-sign a car loan, it felt like the right thing to do. Family helps family, right? He trusted his cousin, but trust doesn't pay bills. A few months later, the payment stopped. Marcus didn't even know until he got a collections notice in the mail. His credit score dropped 80 points. Late payments, collections, delinquency, all tied to a loan he didn't drive, didn't own, and couldn't control. That's the dark side of co-signing. Most people don't realize. When you co-sign, you're equally responsible. If they miss a payment, it's your problem. If the loan defaults, it haunts your credit, not theirs alone. The smart move? Only co-sign if you can afford to pay the loan yourself. You have legal agreements in place. You actively monitor the account, because good intentions won't protect your credit report. Marcus learned the hard way that financial generosity without safeguards can backfire in a big way. Mistake number 5, ignoring your credit report until it's too late. Marcus had been working hard, paying on time, keeping balances low, rebuilding what he'd lost. But something wasn't adding up. His score was still stuck in the 600s. Frustrated, he finally checked his credit report. And there it was, a $143 medical bill from 2 years ago, sent to collections without him ever being notified. That small oversight had been silently crushing his score. This happens more often than you think. Errors, forgotten balances, identity theft. And if you're not watching, your credit suffers in silence. 1 in 5 credit reports has a mistake on it. And even a $10 error can drag your score down for months or years. The smart move? Check your credit report at least once a year. Use sites like annualcreditreport.com, free. Dispute errors immediately. Marcus disputed the medical bill and got it removed. His score jumped 56 points in a month, all because he finally looked. Marcus's journey wasn't perfect, but it was real. He didn't need a 6-figure salary. He didn't need a finance degree. He just needed to learn the rules no one taught him. He stopped making minimum payments and attacked his debt head-on. He stopped applying for every card and let his credit age. He used less than 10% of his available credit. He negotiated smarter, disputed errors, and stayed consistent. And slowly, month after month, his score climbed. 620, 680, 720. Today, Marcus doesn't just have a good credit score. He has options. He bought his first home. He started a business. He even got a better job offer. All because his credit spoke for him before he did. Your credit score isn't just a number. It's your financial reputation. And with the right habits, anyone, yes, even you, can rise from a 600 to a 750 plus. Start small. Stay consistent. Watch what happens. If this story helped you or made you think twice about your credit habits, do me a favor. Like, subscribe, and drop a comment with a mistake you've made or the one you're fixing today. And remember, credit isn't about perfection. It's about progress.